This is Leftist ASMR, and today I'm going to be talking a little bit about the stock market, which for a lot of people is something that's kind of mystified, and I'm hoping that I can hopefully demystify it for a lot of you. I am someone who doesn't really think the stock market is a fair game for everyone to play. And I think we saw that recently with what happened with the stocks for GameStop and AMC and some of these other companies, and a lot of the backlash that people were facing after these stocks shot up. I know this was all over the media, all over the news, on CNN, NBC, YouTube, Twitter, Facebook. People were opening up their MySpaces again just to talk about the stock market. People who maybe never cared about the stock market before, all of a sudden were talking about the stock market. So I wanted to contribute my thoughts onto what happened with the GameStop stock, kind of explain from what I know, my shallow knowledge of the stock market and stocks, kind of explain what happened in simple terms with ASMR, because I know it is pretty complicated and hard to understand, and while I don't have the most in-depth understanding or complex understanding of the stock market or what happened or what a short is or a short squeeze, I think I have at least a base level of understanding, and that might be helpful to any of you who have been reading articles about what happened with GameStop or any of the other stocks and have questions. So I'm hoping I could be that person to kind of explain to you and have you understand too, so that you can make your own opinions on the stock market and what happened. I also just want to take some time later on in the video to discuss the stock market in general and why I think it's unfair and it prioritizes wealthy people over, middle class, working class, and poor people. Why wealthy people have better odds at the stock market than everyone else, and why I think it's a little bit rigged. Which probably for my viewers, the people who watch me and enjoy my ASMR, it's not shocking that I have this opinion, but I definitely want to back it up with a little bit of logical support so that I am not just talking out of my butt. But anyway, to kind of begin the video, I do want to talk about what the stock market is. So, the stock market is basically where you can buy shares of public businesses. And in the United States, at least, there are both private businesses and there are public businesses. And private businesses are ones that are not sold on the stock exchange. They can't be bought by you and me. You have to be, you can't invest in these companies on the stock market. People, just normal investors like me and you, cannot invest in private companies. And then there are also public companies that are displayed on the stock exchange that anyone can just buy a security in. And a security, what that is just a share in a business. So when you buy a security in a company, you now own part of that company. So if you just have one security in a company, you obviously don't have a huge share of that business. You don't own a large portion of it. You own a very, very microscopic part of the business if you own one share in Amazon. But if you own, let's say, 1 million shares, you have a much larger share in that business. So people like me and you could possibly buy shares in a public company like Amazon. The stock market is where you would buy those shares and sell those shares of companies. And what's interesting in terms of the case of GameStop and what happened recently is not only can you buy shares of a company and then sell them, you can also borrow shares in a company, which I'll get to a little bit later. But the way people make money in the stock market is by buying shares of a company. So you're buying little portions of a company, and if the value of the company goes up, and then you sell those shares for more than you paid for them, you've made money. If you bought a part of a company and then the value of the company decreases, and then you sell your shares, you've lost money. So let's say you bought a stock, 3 stocks of Google for $10. Google stock costs much more than $10, but let's say you bought 3 shares of Google for $10. So you've spent $30. And let's say you wait a year, and now those Google shares are worth $20. You've doubled your investment because you spent $30 on those shares, but now those 3 shares are worth $20 each. They were worth $10, now they're worth $20. So all 3 are worth $60. So you can sell those shares, and you just made $60 minus the $30 that you invested. So you made a profit of $30. The opposite, let's say you bought 3 Google stocks for $10 each, and you spent $30, and then you wait a year, and those stock prices went down to $5. So your investment cut in half, and the stocks are only worth $5 each. 3 stocks at $5 each is $15. You spent $30, so you just lost $15. I hope that's pretty simple as to how you can make and lose money in the stock market. What I didn't know, and what I mentioned earlier, I think you can also do in the stock market, is borrow shares. And that's called shorting a stock. And if I'm not explaining this correctly, you can comment and correct me down below, because I'm not an expert. This is just kind of what I understand, probably oversimplified. And shorting a stock is when you borrow shares or borrow securities from someone who owns those securities. Which, the way I understand it, is you're borrowing these often from like a hedge fund. And let me take a moment to explain what a hedge fund is. A hedge fund is a large pool of money, like a very large pool of money, usually a combination of wealthy investors, like ultra high net wealthy investors, people who are billionaires, and also sometimes money from pension funds. So like for teachers in the United States pay into pension funds, and that money gets invested somewhere. So it could be a private equity firm. That money can also go to hedge funds. University endowments could be part of where hedge funds get their money. So when you pay money to a university, or a university makes money and then invests that money, it could go to a hedge fund. So like Harvard University has like a $30 billion endowment, or maybe more than that. That the money that they have isn't just liquid money, it's invested, and that money can be invested in a hedge fund. So hedge funds are compilations of lots and lots of money that then people invest into the stock market. Hedge funds will hire investors, and those investors will put the money into the stock market. So these hedge funds, from what I understand, will allow other people, other hedge funds, people who work at hedge funds, to borrow stocks. So let's say hedge fund A had 3 stocks of Google. They could allow hedge fund B to borrow those 3 stocks of Google, and they might charge them interest on those stocks or some sort of fee to be borrowing these stocks, but they're basically just allowing them to borrow the stocks without actually buying them. So in the case of GameStop, what happened was a lot of people in finance and the stock market were shorting the stock. So they were borrowing the stock because they thought that the price of the stock would go down. So they're basically betting that the stock price would go down, because when you are able to short a stock, you borrow the stock and you expect the stock price to go down. You can actually borrow it at, let's say, you're borrowing the stock for $10 a share, and you're selling it at $10, and then you're expecting the price to go down. So you borrowed it, you sold it. So let's say you had Google again. Let's say you borrowed a stock of Google for $10, one stock, and the stock price went down to $4, and then so you borrowed it at 10, you sold it, so you just made $10. The price went down to $4, so now the price is $4. You bought the stock back for $4, so you just made a profit of $6, and then you give the stock back to whoever you borrowed it from. So that's how you make a profit, by shorting stocks. You borrow the stock price goes down. Well, you borrow the stock, you sell the stock price goes down, and then you buy it back while the price is low, and then you give the stock back to whoever you borrowed it from. So it's pretty interesting that you can make money in the stock market not only by buying and selling stocks, but also by borrowing it. And that's exactly what people were doing with GameStop. These large hedge fund investors were borrowing GameStop stocks. Then they were selling them. They were expecting the price to go down, and then they would buy them back at a lower price and then make a profit, which is not really what happened, as we all know. These hedge fund investors shorted the stock, so they borrowed the stock. They expected the stock price to go down, but it did not. What happened was, on Reddit, people saw what was happening. They saw that the stock prices for GameStop were arbitrarily low in a sense. They thought, interesting, something's not right. The stock for GameStop is really low, and there's some other indicators which I don't really understand because they're too complex, that just signaled to these Reddit investors that something was off. So they thought, why don't we all invest in GameStop together to shoot the price of GameStop stock up, and then we'll all make money. So that's exactly what they did. And when they make money this way, after all these hedge fund investors shorted the stock, they're making money on behalf of these hedge fund investors. So when I think about these Reddit investors, they're people like me and you on the internet. I'm on the internet on YouTube. You're on the internet on YouTube. These are just like normal internet people. People like me and you who probably are not super wealthy. Maybe they're wealthy, but they're not hedge fund wealthy. They're just normal people. And they were able to read the stock market and make an investment that made sense to them. So what they did was they piled all their knowledge together. They used collective action on Reddit to decide to bring the stock price of GameStop up and make money. But what I explained before is that these hedge fund investors were trying to short the stock of GameStop, so they had borrowed many hundreds of thousands of stock securities of GameStop, and they expected the price to go down so that they could sell those stocks and then make a profit when they bought them back for less money than they sold them for, and return them to whoever they borrowed it from. But what happened was, these investors had borrowed the stocks, and then the stock price, so they borrowed, let's say GameStop, they borrowed the GameStop stocks at $1 a stock, and they expected the price to go down to 50 cents so that they could make a 50-cent return on each of those stocks. But what happened was, the stock price shot up instead of down, and the stock price shot up like 1,000%. So now these stocks were, let's say, $100 a stock, and they only sold these stocks for $1. So they're losing a profit. They're losing $99 per stock, which is a lot of money when you've taken out hundreds of thousands. So that's 100,000 times 99. It could be $1 million. It could be 2 million. Some hedge funds lost like over 100 million. People lost a lot of money on these stocks, and so they weren't able to just buy back those stocks and make a profit. They were buying back those stocks to return them, and like losing tons and tons of money on these stocks, while the Reddit investors, the normal people like me and like you, had made millions and millions of dollars on their investments with GameStop. And the reason this made such a big is because people are not used to investors, hedge fund investors, losing money on the stock market, while retail investors, what they call a retail investor, someone who just invests in stocks more casually, to be making millions and millions of dollars on the stock market so quickly. So it was just an interesting event, and the media ran with it. Like I said, this was all over the news. This was all over my Twitter timeline, my Instagram. My parents were talking about it. Everyone was really talking about the stock market. People who've never talked about the stock market, because it was so unique what happened that people were super interested. By the way, I just had to pause this video because my phone ran out of storage, and I noticed how messed up my hair is. I have been not going to get my hair cut since COVID started. I've been cutting it my own, and I've been so busy at work that I haven't been able to cut my hair recently. Also, I've just been kind of lazy, so it's just wild, but that's okay. So to kind of explain again what happened in very simple terms, normal people like me and you, or just like people who are not rich, were able to make lots of money on the stock market, while simultaneously rich people were losing tons of money on the stock market. People who are trained to understand the stock market had been outsmarted by normal people on the internet, on Reddit. So that's why so many people were making memes about what had happened with the GameStop and the Amazon stock. Super interesting. And for a lot of people like me who don't like rich people and don't like that billionaires are able to make so much money on the stock market, were elated to see what had happened. So it really was a Robin Hood story. Poor people, normal people, taking money from the rich in the most simple way possible, and it was beautiful. It really was. But what's ironic is I just used the term Robin Hood, which is the name of an app that people are able to use to trade stocks on, people like me and you, retail investors. And the name Robin Hood was chosen by the company that makes the app, because the whole point of the app is to make it so that normal people like me and you have a fighting chance trading on Wall Street against huge hedge funds, so that the little people are able to democratize the stock market, and that's why they call it Robin Hood. But what is ironic and what is interesting is that when Robin Hood, the app, saw that there was so much volatility, and they saw that the price of certain stocks were shooting up so high, benefiting normal people like me and you, they made it so that no one could trade those stocks on their app anymore. So people got pretty rightfully upset, questioning why they had shut down their app to be trading certain securities. And people were rightfully very angry, in my opinion, and Robin Hood tried to explain that they had to, for one reason or another, for whatever purpose that they gave. But people were rightfully very upset, because as soon as little people, normal people, are making money on the stock market on behalf of rich people and hedge funds, the app shut down and people weren't able to continue doing so. So it's just a really interesting, it's an ironic turn of events that Robin Hood, which was intended to democratize the stock market, was shutting down as soon as normal people were making money on behalf of wealthy people and wealthy investors. And my favorite part of the whole thing, well, one of them, is that a lot of these hedge fund investors are supposedly the most intelligent people on earth. Harvard and Yale and MIT graduates, Ivy League graduates who study the stock market in and out, who spend all day researching investments, who don't have anything else to do with their time other than research investments, and brag about their Ivy League degrees and their institutional wealth. And they were able to be outsmarted by a bunch of normies on Reddit, which is, I think, chef's kiss. It's beautiful. because people have these false, inflated egos who went to these really smart people schools where they learn about the stock market and they learn about data and reading, math, and statistics, and they have access to all this information and knowledge, but still somehow aren't as smart as the normal people on Reddit, which I love because I believe that going to Harvard or Yale or an Ivy League school doesn't make you any more intelligent than anyone else. And I think that this GameStop fiasco really proved that to a lot of people. And you saw a lot of Harvard, Yale, wealthy, institutional wealth people on the internet crying about what had happened. So I just thought that was so beautiful. It really was. So now that I've kind of explained what happened on the stock market and what had taken place, I'll talk a little bit about the reaction. So you saw on the media shortly afterward a few different reactions on the internet, like Twitter, at least on my Twitter timeline and my Instagram. You saw a lot of people really happy about what had happened and making lots of memes and jokes. But when you turn on the TV and you turn on NBC or Fox News or CNN, you saw a lot of people not as happy. You saw a lot of institutional people talking about how the stock markets were too volatile and unstable and how they had to be regulated. And these are the same people who had never once in their entire history argued for regulation of the stock market, or always arguing for deregulation. So it is ironic because as soon as the little people won on the stock market, they were all of a sudden calling for regulation, when their entire lives these people have been profiting off of the deregulation of the stock market and the deregulation of the economy in general. And as soon as one person who is a normal person, who doesn't have an Ivy League degree and doesn't have billions of dollars in inheritance money, made money on the stock market, they were all of a sudden calling for regulation. They weren't calling for regulation after the housing bubble in 2008. They weren't calling for regulation after the banks took advantage of students going to college and causing a student loan bubble. They're not calling for regulation really ever, but as soon in 1929, which started the Great Depression when the stock market crashed, no one was calling for regulation, but all of a sudden now, when people like me and you are able to make money on the stock market, they're wanting regulation, and they're talking about people who are losing their jobs in hedge funds. Yes, it is always sad when someone loses their job, but these are very wealthy people with Harvard degrees. They're not in a difficult situation when people are losing their jobs in a pandemic, who work at restaurants, who work in grocery stores, wherever else, are losing their jobs. They don't want regulation. They didn't want stimulus checks. They wanted the government to be further deregulated. During the pandemic, the stock market has only grown while people are losing their jobs, and that is so sad and so unfair and makes no sense. And these people were not going for regulation or added money into the economy by the government during the pandemic, but all of a sudden they want hedge funds, which are run by billionaires, to be bailed out. No. That's not okay with me. And you saw these arguments being made on mainstream news networks. So I just wanted to contribute to this discourse on my YouTube channel. If CNN, NBC, and Fox News are going to be able to have people on their shows talking about how what happened was not okay and was unfair, I want to put my opinion out there to all of you and explain why I think it was a beautiful aligning of the stars in space, that the GameStop stock had made normal people rich while making rich people not poor, but lose some of their money, of their billions and billions and billions of dollars that barely will ever affect them. That's all I have to say. Now, one additional thing I just wanted to touch upon is that, in my opinion, the stock market is never has been, and never will be fair, because there are people who are much less risk adverse due to having tons and tons of money and generational wealth. They can go and buy hundreds of thousands of shares of stocks because they have the money to buy it, while people who are not rich, middle class, working class, and poor people don't have the money to be risking it on the stock market. If I were to lose $10,000 on the stock market, that would put me in debt. That would put me maybe out of being able to pay my rent or my student loans or buy food. If a wealthy person lost $10,000, or a hedge fund investor lost $10,000 on the stock market, if they lost $100,000, $1 million on the stock market, it may not affect their lives at all. So already there's an inequity in the stock market. Furthermore, wealthy people have more access to information when trading securities on the stock exchange, when using the stock market. When I make an investment in the stock market, it's an educated guess at best. I see an industry I think might be a successful one, and I invest some money into it. When hedge fund investors or wealthy people pay someone to invest for them, they're doing hours and hours and weeks of research when making an investment. That's time and money that I don't have, that normal people don't have when making investments. When someone who works at a hedge fund is able to buy information about an industry or a company that is technically not insider trading, but is about as close as you can get to insider trading, and then do hours and hours of research studying customers and competitors of companies, it is almost as if they have more access to information when making investments than normal people. So, all in all, in my opinion, the stock market is never really a fair way to make money, or it's never really an equal shot at all investors. It's the rich people have better luck than the poor people, and that's always how it's going to be. And not just the stock market, but I think the stock market is a very obvious and blatant portrayal of that concept. That's pretty much all I have to say on this topic. I know this may have been a little bit of a ramble, and I know that I may have went in circles at points, but I've been wanting to talk about this since it happened, and I've also been wanting to post a new video, so I thought this might be the perfect thing to talk about. If you enjoyed this video, please subscribe. I'm really trying to grow my channel to 1,000 subscribers. I know I have a little bit of a ways to go, but I really think that I can get there if people subscribe. Also, please like the video down below and comment, because I really enjoy reading them. It really makes my day when I get comments. To see people engaging in my videos just makes me really